those companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. Our disclosures are very important. Please read them. Trading stock and options involves risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm here to show you what I do in my own account based on my own risk tolerance level for general education purposes only. I'm not a financial advisor. If this is the first time you see the screen, I encourage you to visit optionsclearing.com to understand the risk associated with trading stock or options. All right, again, the goal to become a confident trader, disciplined trader. I encourage everybody to have a trading plan in writing and document your rules in trading journal. We do have one-on-one coaching program. I encourage you, if you have time and you financially committed to trading, to consider one-on-one coaching program where we have custom trading plan for all of the traders. But in general, right, everybody's different because we manage different amount of money, we have different backgrounds, we have different risk tolerance levels. But in general, you want to have cash, on average 30% portfolio in cash. I mean, I still think that, you know, September, October could be volatile. So it's makes sense to raise the levels of cash and look at the portfolio drawdown, number of position and position size. How you determine number of positions, position size? We have stock forecast toolbox. Basically, can help you optimize entry point and exit points on stocks. So for spiders, if market is at 650, consider trimming your positions, right? Or if you were planning to sell, consider selling or trimming your position at 649. If you want to go long or buy, if the market pulls back to 642, 640, consider going long, right? And this is for 1 day, right? For 1 day. You can zoom out for 6 months, model upgraded, updated the predictions. I mean, kind of the same thing, right? That it doesn't see a lot of momentum outside of 660 level. So, okay. So long term, you can see momentum is deteriorating. There's little room to the upside. I mean, we could continue to grind higher, but any negative news, then we could pull back to, well, model thinks 580, 600. I think that's probably extreme, but I guess, you know, it just depends on the news. But based on the momentum, it does see potentially, you know, retracing back to 600. So, and then you look at the positioning, right? This is what model thinks. This is what demand and supply for options futures data for the SPX, where that's majority of the option contracts, probably the most liquid instrument. It sees 6,400, right? So we've talked about 6,400 is your support, and 6,500 remains your overhead resistance as we approach in the PPI data tomorrow, right? We have PPI data, it's inflation data. So for now, resistance is 6,500, right? That's your first resistance. Model sees 6,600 potentially, right? So it's 660, okay, that's resistance number 2. We're already building a little bit of the contracts. And then on the downside, consider buying support 6,400, right? And then previous 2 weeks lows, somewhere in here is your support number 2. Based on the supply and demand for the September and October contracts. Okay, so if you're buying at 6,500 because you think we can get to 6,600 or maybe even 6,700, for day trading, I would use, again, right now VIX is low, so 6 points. If you're day trading, I would use 6 points as a stop loss, maybe 10 points. And then longer term, maybe 18 points. Right? And then $250. On $10,000 account, I propose not to risk more than $250. $5,125 of risk, and then you just divide. If you don't like day trading, you don't want to make decision in hours, okay, then you divide it by 18, right? Look at the last week low, last couple of weeks low. If you doing day trading, then maybe 1% based on the VIX. If it's below 20, it's 1%. If it's above 20, 2%. But somewhere that would be my proposal for how to do the risk management and position size, right? That's position size. That takes time, right? If you can get position size over a long period of time, things will fall in place. If you don't, then it's hard to deal with large drawdowns in your portfolio. And that's what you want to make sure that you prepared for the worst case scenario, right? You should be prepared for the best case scenario and for the worst case scenario, not get surprised, right? What did Mike Tyson said? You have a plan until you get hit in, you get uppercut or punch in the face, right? So when you get punched in the face, you do need to have a trading plan, right? So otherwise, it's hard to deal with large drawdowns. Meanwhile, we're continue to fight for 6,500, right? Not much has changed. We haven't gone anywhere since end of July, right? 436 was end of July. So I mean, we're making marginal new highs, but I would say last month and a half, it's just choppy market up and down, which continues. UNH stands out. That's breaking out, right? Maybe the worst case is over, right? Few months of consolidation. So UNH is going. Fred's Ethereum is going higher. That's good. So Bitcoin still underperforming, right? You have a crossover 20 below 50-day moving average, right? It's been a good proxy for risk taking, and it's underperforming, right? Ethereum, I mean, also consolidating, but above 50-day moving average. Gold continues to make new highs, right? Also kind of running away, right? It broke the consolidation, continues to grind higher. So that's something to, reconcile with. Equal weighted, slightly lower, spiders flat, QQQ flat, and biggest breakdown is in 10-year yield, right? So that's the question, is this down in yield, is it good for the market or is it bad? Well, I mean, we'll see tomorrow on PPI data, right? We're either going to be at 390 retesting the Liberation Day part 1 lows, or we're going to try to get back to this channel above 420. So we'll see. Any questions so far? All right, in terms of trading, I did do, kind of continue to trade spiders at these extreme levels. So we were at 6,500, right? I don't think we're gonna break 6,500 today. So yesterday before the close, at the closing bell, I sold 649, 650 call spread. Let's see. So now I have to manage it, right? That's short-term trading, right? A couple hours a day, right? Using 0 days till expiration options, very popular. That's where majority of this gamma comes. Actually, not majority, but a lot of it. So weekly, monthly is majority, but a lot of it. So I sold it for 29 cents, and it's trading at 52 cents. So, but right now 649. Let's see, where's the spiders? 649.30. So kind of looking at the 15-minute chart, it's approaching the overhead resistance. So let's see, I'll try to close it for maybe 5 cents debit. And again, it's now, if it's, if the market closes at 650, that will be maximum loss. If the market closes at 649, this will be maximum gain. For now, it's up, right? So we'll see where we end up. So that's the spider spread. got into Apple yesterday. Stock. Apple did pull back yesterday. Kind of retesting this gap. So as long as we're above the gap, I mean, no change in the signal. Right? So I'm just watching 234 level and see if Apple can find footing. And then let's look at some other positions. All right, so we talked about Apple, no new signal. It's a stock, so I still have time. Triple M. So we'll look at the rest of the positions. So Triple M, I mean, still weak, below 20, below 50. Industrials in general are also kind of pulling back, right? Also, since the big, I would say, beginning of July, it really hasn't gone anywhere in the past 2.5 months. XLF, the same price action since beginning of July, flat, right? So XLI, XLF flat, so Triple M kind of flat since the beginning of July, and Morgan Stanley financials. Morgan Stanley is doing better, right? Morgan Stanley is doing better than XLF. So above 50, above 20, still long Morgan Stanley. October positions. So we'll see based on CPI and PPI data, and we have interest rate decision, right? Interest rate decision. Last year when Powell Fed cut rates, right, in September, they had 100 basis point cuts, right? We had a pretty decent rally, right? September, October, pretty decent rally. I mean, granted, we had a pullback before that, but you know, when they decided to cut by 50 basis points, you did have a pretty sizable rally, and the rates, 10-year yield, I guess, went the other way. Okay, maybe inflation data, but rates would start going up, but market also start going up. That correlation broke down. So we'll see what's going to happen this year, right? If the yield is going to also bounce back and market is going to go higher or market is going to go lower. So these correlations between equity and bond market, they are based on the fear of recession or fear of the inflation, you know, go in different directions. Any questions? All right, so that's Triple M and Morgan Stanley. I did put on a hedge, QQQ 560, 540, to hedge, you know, my bullish positions. And we were at all-time high again for Nasdaq, right? To close this gap, went from 560 to 580 again. Overbought again based on CPI and inflation data, and based on Powell's decision, I mean, Fed decision, Fed committee decision next week on the rate policy. You know, we're either going to retest 560 or we're going to break out, right? So for now, I'm holding the hedge, right? 560, 540. We talked about Apple, and we talked about spiders. So those are the positions I currently have. Let's see what else is interesting. Let's look. So 10-year for now, not going anywhere. Dollar is still oversold. No new signal. Flat. Let's see. VIX is slightly higher at 15. Spiders flat. QQQ flat. Small caps pulling back a little bit. They continue to make new highs. Gold continues to rally. Germany pulling back. You know, I think they're looking for a new prime minister again, right? Can keep the majority in France. So Germany and Europe is drifting lower. Well, Germany, Europe is kind of still above 50-day moving average. East emerging market breaking out. China is breaking out, right? The emerging market is breaking out. Weaker dollar that has been supportive for emerging market. Crude oil continues to find the support around 62 level. NVIDIA slightly higher. SPX is blue 6,500. Okay. Any other questions? Any questions? All right, so let's look at other. Retail stocks pulling back, right, from overbought conditions, but still a breakout above 84 level. So retail are doing well. We talked about energy doing a little bit better today. Consumer discretion is trying to break out from 2024 high, already above 2025 high. Healthcare is still underperforming. Utilities, sharp pullback in utilities. So I think utilities are overdone, but fund support at the breakout level, around 82 level on utilities. Consumer staples still oversold. Technology, XLK, settle above 20-day moving average, but still not outperforming. Industrials continues to be weak. XLF found support at this support level at the breakout level from the July highs, right at that level. Materials pulling back. Home builders are pulling back. Again, people are taking some profits going into the PPI print tomorrow. So we have PPI data tomorrow. REITs, right? Interest-sensitive sectors are in the move. REITs are also consolidating, trading sideways. Junk bonds, also just like technology, closed the gap, right? Closed the gap. They're at 2025 high, year-to-date high. Airlines pulling back, transportation pulling back. So it looks like value stocks are, let's see, RSP, equal weighted S&P, slightly lower. Japan giving up some of its gains. So Apple consolidating, right, after that gap up. Amazon trying to break out, right? It kind of closed the gap. The earnings gap continues to go, trying to retest 2025 high. Microsoft continues to underperform below 50-day moving average, below 20-day moving average, right? So continues to underperform. Good contrarian trade, probably. If you're long-term AI believer, then Microsoft is probably a good buy for getting to that level. Google continues to grind higher, right? Tesla stuck to Bluetooth 350 level. We're talking about 350 level. There's a lot of positioning at 350 level. JP Morgan, just like XLF, found supported 50-day moving average. Meta is higher. So Meta trying to get back to the all-time highs. NVIDIA continues to underperform below 50-day moving average. Right? Another bearish argument. Not chasing the market. Broadcom is flat. Triple M slightly lower. Morgan Stanley slightly higher. SPX is glued to 6,500 level. Okay. For now, cannot escape that position. Earnings, right? We do want to talk about earnings. I think we have, let's see. I think Oracle. I'm not mistaken, this today, right? Oracle after the close. Okay, so let's talk about Oracle. Has been a strong stock, right? Same thing, AI, right? Improve inefficiencies. Everybody needs they're in data center, they're in big data, cloud. I mean, databases is the main. So it has been a very strong 2025, but volatile, right? Volatile. Last earnings, strong earnings, and kind of funds supported 50-day moving average going into the event. In terms of gamma exposure, okay. So looking at the Oracle, last price is 236, right? After the close, announcing the earnings. Call wall is at 230. put wall is 200, so it's trading below the call wall. Oh, right, above the call wall, 236. And put wall is at 200. So let's see this week, next week, and May expiration. So based on the supply and demand for options data, right? We have a pretty large position to 30, but that's close. After that, we have some position at 230, some position at 200. So people are hedging 200 level, and it's pretty 2 standard deviation moves. So right now, 9% estimated move based on the supply and demand for options data for this Friday and next. Implied move is about, somewhere between 8 and 10% on the upside, on the downside, and the upside. And I don't see a lot of positioning, right? Looks like more to the downside, Let's look at the expected move. Based on historical data, let's look at put and call, volatility chart, maximum pain. One second. All right. So expected move historically, 11% to the upside, last September, September earnings, 13% to the upside, 6 to 4% to the downside. Let's look at put and call ratio. A lot of more open interest in October expiration, basically 3 to 1. Kind of similar to Broadcom, Meta, right? Earnings where a lot of people think it's going to have a bullish earnings and they're playing to the upside. Okay, so you can see put and call ratio skewed to the demand for the calls. Next week it's equal. This week it's actually equal, but it looks like large demand for October contracts. Okay. Volatility, obviously, highest implied volatility is in this week expiration. And in terms of IV rank, and open interest similar to the previous earnings cycle. I don't know, IV percentile, IV rank may be a little bit lower than previous cycle. So maybe it doesn't make sense to sell. I'm inclined to sell puts, right? That it's not going to have a horrible earnings, and then maybe instead of selling calls, either don't do anything with calls or buy calls spread. Since IV percentile is still high. Implied volatility is a little bit lower than previous cycles. Max pain point, let's see, 200, right? So it kind of corresponds to the put demand for put 200. That would be 2 standard deviation move. Right? Above, beyond 13%. All right, so let's see. Let me look at my, all right, so. Okay. But, you know, for some reason, Oracle, you know, started to underperform. But okay, so let's see. So based on the 10, 13, so it looks like 210 strike, 210 to 215. I don't really see anything. I mean, you have a little bit of 210 put volume. Most of this 220, 200. So, well, let's see, 215, 210. What's the option? Oracle. We'll do the target. Let's see if I target 215. So 215, 212 and a half, I can receive. Actually, it was 210. Oh, 210, there's some position 10. So it looks like there's a lot of demand, right? Even, you know, for these options. So that would be about 40 cents. On $2.50 spread. Okay. So Meta, yes, that Meta is, you know, I mean, it's moving along with technology sector. So Oracle, do you still hold the September, or did you roll it to October, Todd? I mean, if you still have September, I would roll them. If you still want to keep the position, I would roll to October, especially in front of CPI data and, I mean, the interest rate decision is kind of, you know, it could go either way. September hard to repair, but October, you know, assuming, you know, choppy market and not a big pullback, it should continue to grind higher. So, okay, so sold to 10 to 7.5 put, received 40 cents. Right, you can find the same trade under earnings power trader on Yellow Tunnel. Okay. On the upside, I mean, these are all equally distributed. I don't see any major trade option. So 270. Or do I want to go with the crowd and buy a call spread? Probably go. Last one time, surprises were to the upside. So, okay. So if I do Oracle vertical, let's do September. Can I buy for 40 cents? $260 to 62 and a half. Only if it reaches the all-time high, kind of Broadcom or Meta earnings. So, I mean, if I don't think it's going to go above 260, if it's not going to break all-time high, then I would sell a call spread. But based on the AI theme and, you know, the other way is just to buy, you know, call spread. I don't know if I have any strong opinion on Oracle. It has moved 11 to 13%. So if I go to the next week, 260, 262.5, right? Kind of a targeting this strike, one standard deviation strike, 260, 262.5. It will be trades at about 55 cents. $55. I mean, MongoDB had a strong, right? This is another database provider, AI, kind of a strong earnings. So I'm gonna go with the crowd, right? I'm gonna go with these guys who thinks we're gonna, bought 4-to-1 puts to calls. Okay, so sold 210, 207.5 put spread for 40 cents and use it to finance the debit spread. So as long as we're staying above 210 level, maximum risk is 10 cents. If we do get to 260 level, I went into the next week expiration, right? Kind of punch one, punch two. If we have better than expected inflation data and we have better than expected, Fed can cut 50 basis points, right? Even though based on the futures data, implied interest rate cut is only 25 basis points. If they cut 50 basis points, well, the market is probably going to rally, right? And if Oracle has decent earnings and macroeconomic data is supportive, you could get to this one standard deviation move to 60 to 62.5 all-time high. Then the maximum reward would be $2 plus 40, so $2.50. Right? So maximum reward is $2.50. Maximum loss is also $2.50. Right? So, but maximum risk and maximum reward would have to be in both, at the extreme levels. If we reach the extreme level. Any questions on Oracle? So this is a credit spread, right? I sold 210, higher strike, bought lower strike. So this is a credit transaction. And then this is a debit transaction, right? You can find the same information on Yellow Tunnel. So this is debit call spread next week, right? I just want to give myself a little bit more time for this trade to come together, and then this is this Friday expiration. Any questions on Oracle? All right, let's send this alert. I don't know if you have any questions so far. All right, so let's see. So 50 cents. It's able to get 50 cents. And then 2, risk. 0.5, this is debit. Left open, buy to open. Credit. .4 credit. Here, Microsoft called yes. So for now, question was on Morgan Stanley. Sorry, Morgan Stanley. I'm still holding Morgan Stanley call spread. It's October, so I do have time. I don't have any more September positions, right? Monthly September positions. And then alerts. So the only thing to keep an eye today, the most important is spiders, right? You don't want to be assigned. Because if we close in the middle of 649, 650 range, right? You could get a sign, right? So you don't want to take that risk, especially on a smaller account. So by end of the day, you know, at the closing bell, if it's, let's say, closes at the same level, then you need to close it, you know, close the spread. So by end of the day, you want to be out of the spread. You can close it now for 50, 55 cents if you don't have time to watch the trade, or, you know, wait till end of the day and, you know, and then see if we break out of this 650 range. Any questions? So on Discord, next broadcast will be Friday, right? Or, you know, Keith will be back on in the morning, Wednesday morning and Thursday morning. Keith will do the opening bell on the GoToWebinar platform, which you can also register on the website that I put. All right, so thank you, Discord guys. Go to webinar. Any other questions? All right, Claude, John, Lalit, Larissa, Lucas, Mario, Dr. Simon, Patrick, Raul, Tahir, Ted, Bill, thank you very much. And I will see you guys well, some of you tomorrow at the closing bell. All right, thank you very much.